Chakri Lokapriya also joins us. Chakri, good morning. Thank you for joining us. You've been buying real estate stocks, and when we first spoke about real estate stocks 3 months ago, it looked like an odd bet, but thankfully that bet has worked for you. So what exactly did you buy in the real estate space?
It's been largely companies like Prestige, which have a good commercial real estate component, because whenever now there's more noise about REIT actually happening, and once the tax implications become clearer, then it deleverages the balance sheets of all these real estate companies, because when you create an operating company and you create a REIT, that allows them to clean up the much needed stress in the balance sheet. And that allows them for the growth. That is one on one hand. And on the other hand, the residential real estate, on fears and the height of demonetization, there was all this fears that how low we will go. And then I guess there's a realization even on the part of the consumers that interest rates are not going low any further. And usually any real estate demand, residential real estate demand, is linked with real estate, interest rates. So once that realization set in that interest rates are also not going lower, there was a pickup.
Chakri, anything from the infra space that you're liking, infra or related infra themes? You were seeing a big move in not just real estate, infrastructure, one is seeing pure play cap goods as well hold out, cement is looking good, this entire cluster is moving up.
Yeah, if you take cement for starters, and cement again, there's this huge government ambitious program of housing for all, and also combined with the fact that certain states are doing well, like Andhra Pradesh, Telangana, Maharashtra. Cement demand is actually picking up after years of downturn. Prices are still not moved up, capacity utilizations are still low, and so if you combine it all, I think cement will do well, or rather continue to do well. And also one of these things, all these companies, construction companies and industrials, are big, what do you call, on lower interest rates or lower tax rates, moves the needle big time for them. Now if you look around the world, whether it's Trump's thing of reducing corporate tax, or moves around the world, there's a thing to reduce corporate taxes. So if that move translates in the form of GST for Indian companies, and you don't get into the anti-profiteering clauses, in that case it changes the dynamics quite significantly. Really buy corporate banks, not the retail-oriented banks.
ICICI Bank is a corporate bank. If
Yeah,
you bought it 4 years ago,
Axis,
you've not made money.
You have not made money. And
if you bought Axis Bank 2 years ago, you lost money.
Indeed.
So why would you buy corporate banks?
The stress in some of these NPAs, etc., have kind of plateaued. There is a growing realization that, at some point, all these guys have to go out and stop looking at valuations and actually raise capital. And that becomes a self-fulfilling prophecy of stronger balance sheet, stronger credit growth, a higher stock price.
Chakri, just when everyone was only betting on what the urban trend is going to be, the recovery, the fads that the millennials would be picking up on, here comes the company which perhaps has its ears and eyes closest to the ground in terms of the rural sense of the market, and they're saying that the rural recovery is very much in place. Do you sense that now it's time to perhaps shift investments to that category too?
I think so, simply for two reasons. One is coming off a bad December, when there were fears of the cash crunch of demonetization. And second is the talk of a good monsoon, of a 96% normal monsoon. I think these are the two factors, and also in our recent visits to some of these pockets which buys products of these are served to the retail, they're seeing very good numbers. And you're also seeing like textile companies, textile sectors, they're saying that demand is really strong. We were really surprised, but that's the commentary coming across.
So, Chakri, for last couple of years, if Page Industries, Bosch, some of these names have dominated Indian markets, iShare, what could dominate markets for next 3 years? Because these same stocks will not be going up in that kind of a figure. I mean, there would be new horses.
The traditional laggards for the last, I think industrials are at many multi-year low. And so you have a fresh legs coming in if the government's push turns into reality of more roads, bridges and dams. And so industrials and banks, after all this run, if you look at some of these PSU banks, they're still trading at half a time book value, 0.6, 0.7 times. So from that perspective, in terms of returns, you have sufficient returns. Newer sectors, I guess it'll be more in the services rather than manufacturing.
Chakri, any opportunities to buy into the pharma space, or would you stick by with Biocon, which has suddenly shot up after being an underperformer last many years when the rest of the sector was in the limelight and glory? And yeah, well, fortunately, there's no negative news in Biocon as of now.
Biocon has one of the lowest domestic revenue. It's probably about 8-9%. And I think right now we're shifting, I mean, whoever's buying pharmaceuticals are better off buying companies with greater export revenue rather than domestic revenue. Simply because if this generic thing is true, mind you, it can be a big blow because it's a 90,000 crore domestic industry, and Indian domestic pharmaceuticals is largely a branded drug industry. And while I don't think it's really feasible simply because you need lots of controls in place, how would you trust a chemist to give you the right drug? So that is a problem. So in this case, I think Biocon is partly reflecting that.
Another IPO as well kickstarts today, an S. Chand and Company. This is sort of a peer of Navneet publication. Have you looked at the prospectus? Does the company model interest you? And what really is the advice to investors out there? Should they be buying into this?
Yeah. You know, this is a company that we don't follow that much. But the one thing which I know is that all the textbook business is going away from them, given that it's gone online. So from that perspective, it takes away from revenue growth rather than adding to it. But I haven't followed this company.